Good evening, all. How have you been? How's the chapter been going? I hope you have been reading from the notes as well, the study mat. I need the Josh to start the class, as usual. Where is that Josh? Where are people? चलेंगे कार्तिक ऑडिट तो चल ही रहा करवाएंगे आज भी ऑडिट for time being till everyone is joining in for the session. Any doubts from the previous session, please? And I have this with me. जाते जाते कार्तिक ने एक डाउट पूछा था. Let me get that. I've taken a screenshot for that. Oh, nice. Many people have joined. Some people are quite punctual. Right at 6, they would log in. What was Tiwari ji was asking me, sir, please share the questions asked in the session. Tiwari ji, those questions were random. They were not written anywhere, but whatever questions I'll be sharing you after we finish this chapter, I'll take care that I provide you with the best possible questions, right? Those questions were random. Siddharth, Sriram, Isha, Sudhanshu, Banreddy, Pooja, Gayatri, Hitesh, Prabhas, Karthik, Shreya, Meghna. Good evening. Or Karthik asked me, in chapter 3, we learned assertions classified under 3 heads. Classes of transactions and events, that was P&L, aptly written. Account balances, balance sheet, completely fine. Presentation and disclosure. Sir, the third head is not specifically stated in this chapter. Is it wrongly shown in chapter 3 or this chapter is restricted to those two only? No. It is one and the same thing, Karthik. Presentation and disclosure has been merged with assertions. Other assertions in both the heads. You know, presentation and disclosure is something which is a completely different assertion. They have made it a part of balance sheet as well as profit and loss with every head. So you need not get confused. The first class of assertions, profit and loss, remains the same. The second class, balance sheet, remains the same. The third, presentation and disclosure, they have fitted it with both the parts, the balance sheet part as well as the profit and loss part in between, so that you get to know how to present and disclose each and every thing about those heads right there. There is no separate head. Don't get confused that presentation and disclosure is somewhat different over here and in chapter 3. It is one and the same. Okay, Isha, sir, if we have to write all audit procedure, mention, or we can skip some. Isha, it depends upon the marks. See, it is not about just remembering the concept or just cramming the answers or just writing points. What I'm going to tell you is one of the weaknesses of students when they write in exam. What happens is if they see it is a 4 marks question, they'll write just 4 points. Each and every one of you here, just mark it, whether note it down या कान खोल के अच्छे से सुने. 4 marks doesn't mean that you have to write 4 points. Gone are those days when you were a child and you'll get 4 marks when you write 4 points. बचपन से बाहर निकलना है, and now you have to write the best and the strongest points. Okay? And you cannot write something like if you're going to check the revenue, check the sales, check the bills, check the debtors. You'll have to explain each and every part along with example. And if you have so many points, like if like Isha is asking me, sir, we have to write all the procedures. Like in some cases, you have audit procedures almost 10 to 12 in number. So first of all, it depends upon the marks. Further, if you have to cut it short, right, you'll have to write only 4 points. Or if you feel the question is of 4 marks, we can write 8 points. Write the best and the different points. Each point should be different from the other. If there are 8 points, those 8 points should be unique and specific in themselves. It should not be like this. Point number 3. What is point number 3 saying? The same thing is being said by point number 5. So what is the need of writing 2 points? When one point is just copying what the other is saying, it's just the language is different. Always make sure that while writing answers in theory papers, specifically audit, if you are writing 4 points, 5 points, 6 points, if they are like this only, it is completely fine. But if you are choosing from a host of points, choose your best points, which are different from each other. Only then you will get marks. And they should be the best ones. Okay? Any. My pleasure, Any. Okay. Sarthak, it's fine. Even you'll just have to take care of the amendments in company law, right? In company law as well as your May 23 attempt. So what you can do is you can always refer to the amendments in the new modules or the RTPs for your attempt. My pleasure, Rahul. Yes, Cyril, the quality of answer is really, really required, not the quantity. And that should also be specific, you should not be writing stuff like that you are explaining something. Okay, you are explaining something in detail. That details should also be avoided. Writing too much is also not required. Writing too specific is also not required. It should be completely balanced. Fine. Anything else from the previous session? Please speak up if you have any doubts from the previous session or anything relating to your answers. Otherwise, I'll move ahead. Good evening, Gomti, Aditi, Kushi, Kushia, Esai. Chali, let's move ahead. So are you reading it from the study mat, practicing your questions from the study mat, everyone? Have you been doing questions from the study mat? Yes, Aditi, you are right. Tiwariji, you got it. Shriram, well, you are getting addicted to team activities. You people, sir, आज भी team activity होगी. Today there will be team activity or not? कुछ पढ़ेंगे उसके बाद team activity, right? We'll have to study first. If you are not studying, what will be the base or criteria for a team activity? So we'll study first. Only then I'll have to prepare you for the activity first. I can't directly put you into a test. Karthik. You're such a funny man, Karthik. Funny boy. Okay, fine. I'll take a screenshot of that, Karthik. Thank you. Fine. So let's move ahead. Pichla share capital, you want me to make you revise it? Okay. Fine. So we left over here. Nilabju. Nilabju, the process of doing RTPs is like when you are finished with one chapter, you can always practice questions from the RTP. So it's like when you are done with your chapters, like you are done with your 8 chapters and you have read them properly, you have practiced them, you can take up your RTP and you can always practice it, the revision test paper. The beauty of RTP is like this, that everything is categorized chapter wise. So it's really good. And I would suggest that first you practice the questions chapter wise, then you go into the integrated case scenarios. Integrated means a mix of various chapters and topics, so that you don't feel left out that you have not done this chapter or particular topic. Okay. And try at least that if you are doing RTP from the November attempt or the November 22 attempt, if you can get the RTP on the ISA website as well for May 22. So try practicing the May 22 RTP as well. Okay, just keep a note of the amendments from May 22 to November 22 and you are sorted. Right? Sonika, I'll be uploading the notes of the previous session. I'm uploading notes by 2 sessions. First we discuss over here, then I'll upload the notes, so that if there is anything I need to edit or I need to add something extra, keeping in mind your considerations, so I'll make the relevant adjustments. Okay. So I'll be uploading the notes of the 3rd and the 4th session either by tonight or by tomorrow. Okay. Oh, I'm so sorry. I'm so sorry, Aditi. But I told you that I'll be providing it at the end, right? If I'm not wrong, I told you I'll provide you a chart of chapter 9 at the end. Hitesh, as per your capacity. I'll share the chart, Aditi, while uploading the last segment of notes. I'll share the chart for sure. Okay. Hitesh, as per your capacity, but always practice in reverse chronological order. You'll always have to practice the latest RTP, then a previous attempt, then attempt previous to that attempt, in this way only. Okay, so that the latest RTPs are not compromised. Chali, so we did share capital, the existence of share capital, the completeness of share capital. I showed you the forms, MCA forms, SS7 and PS3. Do you remember those forms? That is not relevant for your exam purpose. Just shown them so that you could get a glimpse what do the forms look like. And I was amazed to know that many of you answered correctly when I asked about the forms. So it is just a way to remember the names of those forms if you just get a glimpse, right? You don't have to just understand that what is to be filled in that form. It is completely fine. When you'll be doing your articles, you will get the opportunity to do that. But for time being, you should know what was SS7, what is PS3. PS3 is return of allotment. SS7 is like you file the form for alteration in share capital. So when you get a glimpse, you always remember that yes, SS7, PS3, you know, right? And then we did the valuation, the measurement part, the valuation part. So what we did, the securities premium, shares issued at premium, then shares issued at discount, then exception to shares issued at discount was sweat equity shares, right? Then reduction in share capital. And in last presentation and disclosures, this M part was we have to give shares held by promoters at the end of the year. This is serial number. This is serial number, right? Then promoter's name, number of shares held by the promoter, percentage of total sales shares, This is at the end of the year, right? And the percentage of change during the year, from the beginning till the end. What was the opening number of shares? What is the closing number of shares? What is the percentage change? The promoter here means promoter as defined in the Companies Act 2013. You would have done it in your law. Details shall be given separately for each class of share. Each class is what? Equity, preference, with voting rights, differential rights, without differential rights. Percentage change shall be computed with respect to number at the beginning of the year, or if issued during the year for the first time with respect to date of issue. So if it is a new company, the shares were issued during the year, then with respect to that number. Otherwise, what was the number of shares held by the promoters at the beginning of the year for calculating the percentage change. Okay. So share capital audit procedures, what does it say? Here it is not TS3, it is PAS3. It is PAS3 form. It is written in the module as well as the notes. It is return of allotment when you allot shares to your shareholders. When you allot shares to your shareholders, you have to file a return with the MCA. That return contains the details of how many shares have been allotted by the company, to whom have they been allotted, what was the price at which they have been allotted, everything. That is called a return of allotment. Now, finishing the share capital part, it says utilization of borrowed funds and share premium. Utilization of borrowed funds and share premium. So what are borrowed funds? Let us first do borrowed funds, then we'll come to this section. Okay, I'll not take up this section, Abhi. Let us understand reserves and surplus, borrowings, then we'll come to this part, because it contains, it says utilization of borrowed, the funds you have that have been borrowed by the company, and share premium. So we come to the, let's start with reserves and surplus. The most interesting part, the most lovable part in the +2 standard, reserves and surplus. What are reserves? Amounts appropriated out of profits. You remember, you need to prepare, you used to prepare, had anybody of you prepared profit and loss appropriation account? Do people know about what is a profit and loss appropriation account? Out of profits that are not intended to meet any liability, contingency, commitment, or diminution in the value of assets known to exist as at the balance sheet date. Siddharth says reserve is like a mummy's saving. Could be mummy's savings. Why not your own savings, Siddharth? Go to your own piggy bank. Mummy's saving. Okay. Appropriated. What is appropriation basically? Appropriation is something dividing into different parts for future needs. That is appropriation. For example, you get a box of chocolates on your birthday. Okay. People who love chocolates, who love dark chocolate for them. Milk chocolate, simple chocolate. For example, I get a basket of chocolates which contains dark chocolate, milk chocolate, and normal chocolate, like white chocolate. So what do? I would, as a child, what would I used to do? Nahi, sari chocolate aaj nahi khaunga. I'll not eat it today only. You know, I'll go and get it, put it in the fridge, right? Refrigerator. So this is for this week, and this is for next week, and this is for this pure mahine ka. I would make a table. That would be in my mind, that I'll be eating all the chocolates in this month, but I'll appropriate it. I'll keep some for my brother as well, for my sister as well. Okay, this one is for you, this one is for you. So once I've got the chocolates, I'll preserve them. I'll reserve them for myself as well as my siblings. That was appropriation, something you have got, something you have with you, some surplus, right? Amount appropriated out of profits. Profit is the surplus, the whole thing you have with you, and you are appropriating it to different categories. I got my pocket money. I've saved my pocket money for 5 months. Now I have 2,000 per month pocket money. I have 10,000 with me. What I'm going to do, I'm going to budget it. Okay, 5,000 I'll keep for my expenses, birthday parties and all that stuff, and 5,000 I'll reserve. 2,000 I'll put it into the academic part. I'll buy books, I'll buy novel. Further 2,000 I'll keep it for I would say a trip after the exams with my friends. The further 3,000 I'll keep it for a trip with my friends after the exam. So this is what I have reserved my money. I have reserved my money. 2,000 is for my academics, any books I want to purchase, and 3,000 for my holiday or my vacation, whatever it be. I have appropriated. In the same way, when a company gets surplus, it has huge profits. It thinks of the future. It thinks of the time when there could be a time like this where we might not get any profits, or we might have to use our money for something big, for something which is a milestone for the company. In that cases, we should be having money. We should not be just dependent upon our current revenue. We should be having something saved with us. Now, savings is something which Indians are very good at. Whether it be gold, whether it be jewelry, whether it be cash or banking, Indians are very good at it. And we got to know about it when demonetization happened. Actually, we got to know about it when it happened. What are actually savings? Okay. So reserves are what? They are some categories of accounts where we appropriate our profits currently, which are not intended to meet any liability or any contingency. Contingency means future liability. Any commitment which we have made today or diminution in the value of assets known to exist as on the date of the balance sheet. The day we are making reserves on that date, they are a vital source of financing by internal means. If you have done internal reconstruction, you could know the importance of reserves, redemption of debentures, redemption of preference shares, buyback of shares. So how important the reserves are. You could have done the hierarchy. First, we'll have to use this reserve, then we have to use this reserve, and at last we can use free reserves and profit and loss account. So this is what you don't have to borrow from outside. You don't have to borrow from outside. You have your internal means, self-sufficient. They are held for the purpose of distribution of dividend. Dividend is distributed from the reserves, or financing the expansion of the company, or strengthening the company financially. So can anybody tell me dividend? We all know that dividend is distributed out of free reserves. We all know about it. Then strengthening the company financially. More the reserves, more is the shareholders' value. Company is strong financially. How come can we use the reserves for financing the expansion? If the company is going to venture into a new business, or it is going to explore a completely new business, it needs funds. How can reserves be helpful in that? How can they be helpful in financing the expansion? So please tell me, how are reserves helpful in financing the expansion of the company? Obviously, Nilabjo, you'll have to share with your siblings. Aditi says reserves are transferred to profit and loss again. Okay. Give me an example. How can reserves be used to finance the expansion? I need an example. You all have done company accounts. I just need an example. कोई भी एक example. Any. Hmm. Good, Shriram. Yes, Bandadi, obviously by utilizing. Well, you have to utilize them. This is the basic thing. But I just want an example. Okay, for example, like you need money. Okay, reserves can't be used directly. Sometimes you want that, yes, we need money, and what do? The best example is the issue of bonus shares, right? No doubt there is liquidation in your diminution in your shareholding, like dilution. There is dilution, not liquidation. I'm really sorry. The dilution in your shareholding, but obviously with bonus shares you get extra money. You just have to issue shares, and the shareholders' money, which is there in the reserves and surplus account, you can always transfer it to the share capital and use that money for your financing part. This is just one example. Yes, capital reserves. Good, Isha. Yes, Prabhas. Good. Good, Nilabjo. Yes. Good. So the company utilize. This is a very important line. The company utilizes the reserves according to the nature and type of such reserve. So we have two types of reserves. We all know about it: revenue and capital. Revenue reserves, which can be used for many purposes, like free reserves. Capital reserves, which have a limited purpose, don't carry much scope, much wider scope. So revenue reserves represent profits that are available for distribution to shareholders or for below purposes. Distribution to shareholders, what would it become? Dividend, or for below purposes like to supplement divisible profits in lean years to finance an extension of business. What is lean year? A lean year, like the years where you don't have much profits, or there could be losses, or you don't have even so much profit so that you could distribute it among your shareholders. In that case, I have my reserve, right? I'm going to another city and mom packs tiffin for me. She makes breakfast. I have had my breakfast and she packs tiffin. Take this with you while traveling. What is that? What is that lunch tiffin? That is a reserve, right? So that if I don't find food around, I can munch on that food and satisfy my hunger. In the same way, these reserves help supplementing the divisible profits in lean years. Those years when you don't have much profits to distribute, you can take the help of these reserves and distribute dividend among your shareholders to tell them everything is okay, it's completely fine. Company is strong enough that it can distribute you dividend even in lean years. To augment means to increase. In Hindi, we can say badhana. The working capital of the business. So you can use this reserve to like what is working capital? The finance of the business, the funds of the business that are used in day-to-day routine. You can take the help of revenue reserves to finance your working capital to generally strengthen the company's financial position. Okay, someone give me an example. I want an example from you. How can reserves be used to augment the working capital? I want an example from you. Let's see who gives me the example. Shriram, that is a definition. That's completely fine. Like year 2020, linear 2020. Okay. What is capital reserve? Capital reserve represents a reserve which does not include any amount regarded as free for distribution. Free for distribution. Too much limitations, too much restrictions attached to the use of these reserves. To utilize the amount from reserves, you will always need to transfer it to a usable account from where you can use it. So capital reserves have too much restrictions attached to them. They have their limited purpose, limited uses. And capital reserves always get filled, like what is the capital reserves always get filled with surplus from the items of capital nature. Securities premium, while at the time of issuing shares, capital redemption reserve, a reserve which is used to redeem the capital. It is created out of capital transactions and it is used further in capital transactions. So capital reserve is created from capital profits. Capital profits, the profits which are non-recurring, which are not occurring every year. They are not making those profits every year. They are situational. Right? This is not the business of the company to sell a particular machinery or a particular building. The company is not dealing in it. Earned through the sale of capital assets, such as sale of fixed assets, profit on sale of shares. These help in creating capital reserves. It can generally be utilized for writing down fictitious assets or losses. What are fictitious assets or losses? The preliminary expenses, the debit balance in your profit and loss account, as you find it in your questions, practical questions. What is the debit balance in your profit and loss account? The accumulated losses over a period of time. So you can always use capital profits to write them off. Important is subject to provisions in the articles of association, whether you can use the capital reserve for the same or not. For issuing bonus shares, if it is realized, you all know, you have done it in your accounts. Capital reserves realizable in cash only, that can be used for issuing bonus shares. Capital reserves arising out of book entries, they cannot be used for issuing bonus shares. I hope you would have done it in your law and accounts. If not, just let me know. I'll explain what is the meaning of for issuing bonus shares if it is realized. I'll take it up, right? The amount of securities premium or capital redemption reserve account can be utilized only for the purposes specified in section 52 and 55 of the Companies Act respectively. So securities premium as per section 52, we have done it. Capital redemption reserve as per section 55 respectively. The purposes mentioned therein. It may be noted that if a company appropriates revenue profit for being credited to the asset replacement reserve with the objective that these are to be used for a capital purpose, such a reserve shall also be the nature of a capital reserve. So you appropriate your profit, right? You transfer your profit to revenue reserves, but it says if from the current year profit, the company transfers or credits any amount to any capital reserve, like for the replacement of assets, the asset replacement reserve, the objective of transferring that amount is for a capital expenditure in future, then that reserve has to be treated like a capital reserve. Even if transferred out of current year profits, that would also be treated as a capital reserve, the objective being to be used for capital expenditure in future. Good. You all give good answers. Really good, really good. One of the relevant questions which I found over here, which I need to address is how to differentiate capital reserves realized in cash and capital reserves occurring as book entries. These are taken care of when amounts are credited to these reserves, Shriram. You always have these two categories available with you in the accounts department, if it is so, to differentiate between the capital reserves realizable in cash and the capital reserves which have been filled with the book entries, right? They got credited with the book entries. In your practical questions, you're always given that such amount of capital reserves realizable in cash means actually you got that profit in cash as well when you credited the capital reserve. Actually, you got that much value of cash as well, equivalent to the amount of profit. Okay. Aditi, we have done bonus shares in paper 1 and paper 2. Yes, in paper 1, paper 2, you have done bonus shares, which reserves you can use and which not. Aditi, it's good. Like you issue bonus shares whenever you want to use any amount from reserves, you always make a road for it. Like you issue bonus shares, you take the amount out of the reserves and use it as share capital. Why do you raise share capital? Because you need money. So if the amount in reserves cannot be utilized directly, what do? You issue bonus shares. And that much amount you can take out of the reserves and use it for your purpose, whether it is for a revenue purpose or a capital purpose. If you want to use it for working capital, you can. You have got money with you against the use of shares. Rahul, I think that is covered in accounts. You have a chapter of issue of bonus shares and right shares. Okay, assertion number 1, existence. Reserves and surplus exist as such period end. Same way like share capital, trace the balance and tally the opening balance of reserves and surplus to the previous year audited financial statements. If the company is making profits, the balance of reserves and surplus would get increased. If there are losses, the net balance of reserves and surplus would be showing a declining. Completeness, reserves and surplus balances that were supposed to be recorded have been recognized in the financial statements. In the case of profit and loss, you have to trace the movement of profits or losses, surplus or deficit, as per the statement of profit and loss for the year under audit. Because after appropriations, whatever is left in the statement of profit and loss, you transfer it to your profit and loss balance under the category reserves and surplus. The movement should be traced in the statement of changes in equity. We have done statement of changes in equity under the balance sheet caption. Verify the resolution passed by the board of directors regarding the recommendation of dividend. Resolution passed by shareholders in declaring the dividend. So you all know about this. The directors recommend a dividend and the shareholders pass the dividend at AGM. So as per AS4 or Ind AS 10 as applicable, if dividends to holders of equity instruments, equity shares, are proposed or declared after the balance sheet date, an entity should not recognize those dividends as a liability as at balance sheet date, because as on the balance sheet date, they were not even proposed or declared. It should, however, disclose the amount of dividend that were proposed or declared after the balance sheet date, but before the financial statements were approved for issue. Disclosed means in the disclosures you have to give that the financial statements have not been approved yet by the board of directors, but meanwhile, after the year end, such amount of dividend has been proposed or declared, and this will be paid during this year, the next year. So before approval of financial statements, you have to disclose it in the notes, but you cannot show it as a liability, current liability, unless and until the dividend has been proposed or declared before the period end. Yes, Meghna, right. Rahul, I'm just giving that example only. We are doing reserves only. Free reserves is also a reserve, and security premium is also capital reserves. I hope I'm clear, Rahul. Sarthak, I agree. It does not involve inflow of cash, but there is appropriation. There is like transfer of amount from reserves. We are utilizing the locked cash. Yes, yes, yes. You all have done AS4 revised. Good, good. This is with respect to the profit and loss balance, the securities premium. These are auditor's procedures, right? The auditor needs to confirm that the company has issued shares in excess of the nominal value of shares. And for the same, the auditor should obtain and verify the resolution passed by the board of directors in the board of meeting of board. This is the same for the utilization of securities premium account could be done for limited purposes as per section 52, and the auditor has to ensure that securities premium account is being used for that purpose only. Valuation. Reserves and surplus have been valued at a final value after all the transfers and appropriations have been made. Whatever transactions happen during the year, occur during the year that have been adjusted with respect to the reserves, all transfers on appropriations and a final figure should be worked out, and that is what the reserves and surplus should be valued at. Presentation and disclosure, the same part. Schedule 3, Part 1. Reserves and surplus shall be classified as capital reserves, capital redemption reserve, security premium, debenture redemption reserve, revaluation reserve, share options outstanding account, other reserves. For other reserves, we have to specify the nature and purpose. And last but not the least, and the most important, the surplus, that is the balance in the profit and loss account. Disclosing allocations and appropriations such as dividend, bonus shares, and transfer to or from reserves. What amount have you transferred from the profit and loss to other reserves? What amount has been transferred from other reserves to profit and loss account? What dividend has been appropriated? What bonus has been issued? Everything you need to show it in the statement of profit and loss. Additions and deductions since last balance sheet to be shown under each specific head. The movement of funds in the reserves. You have to show it. Addition and deduction is the movement of the balances in these reserves. I hope you all know about the difference between capital reserve and capital redemption reserves. You want me to take it over, or you know about the difference between capital reserve and capital redemption reserve? And yes, I want an example for this. If you have done company accounts, it will be very easy for you to give me an example of this. A reserve specifically represented by earmarked investments shall be termed as a fund. What is the meaning of earmarked investment? And the reserve specifically represented by earmarked investment shall be termed as fund. I want an example of this. Yes, Viral. Yes, CRR is a type of capital reserve. CRR's scope is not that wide as that is of a capital reserve, right? So CRR is kind of a capital reserve. Capital reserve has much wider scope of use. CRR has restricted use. Very good, Prabhas. Investment allowance reserve fund. What is the meaning of earmarked investment? Can anybody tell me what is the meaning of earmarked investment? Good. Debenture investment fund. Yes, Karthik. Good. Good. You have done redemption of preference shares, redemption of debentures, and in redemption of debentures, what would you do? You would appropriate some amount of money to the debenture redemption reserve, DRR, and further, or capital redemption reserve, and further, this amount was not left on its own. Simultaneously, you would invest the amount in an investment in market, and that would known as debenture redemption reserves investment. That would be debenture redemption investment or any kind of marketable investments. So that at the time of redemption of debentures, for book entries, you'll be using the debenture redemption reserve. But for paying out to the debentures, you will sell that investment and get cash against that to be paid to the debenture holders. So that particular reserve has been represented by earmarked investment. That particular investment can be sold only when redemption of debentures is due, and the proceeds from the sale of those investments would be used to give money to the debenture holders. Any surplus left, that can be transferred to your general reserve. Otherwise, the amount has to first prioritize to be used for paying money to the debentures. Like, I don't know whether you have done that sinking fund method of depreciation in your +2 or graduation classes. You would maintain a sinking fund and then sinking fund investment. If you guys remember, the best example, sinking fund and sinking fund investment. If you have done that method of depreciation in your +2 or graduation classes, you could easily relate to it. The earmarked investment and the funds related to it. Yes, Shriram. Yes, almost everybody has read about sinking fund. This is the same thing. The fund is created on the liability side and the investment gets in on the asset side. For the book entries, you eliminate the fund from the liability side, and for paying to the debenture holders, you sell the investment on the asset side and generate cash to be paid to the debenture holders. Or for any purpose, you have invested in that particular securities or investment for. Yes, Cyril, yes, I know. Further, debit balance of statement of profit and loss shall be shown in the negative figure under the head surplus. Similarly, the balance of reserves and surplus after adjusting negative balance of surplus, if any, shall be shown under the head reserves and surplus even if the resulting figure is in the negative. What does it say? It says, for example, you have incurred losses. right? So the debit balance, you have to show it under the head reserves and surplus. So under the surplus head, under the reserves head, you will show reserves. Under the surplus head, you will show the surplus part. And you'll have to show the losses incurred in negative under the surplus part. And further, the cumulative balance of reserves and surplus, even if it is negative, even if it is coming to be negative, you'll have to show it under reserves and surplus only with the minus. You cannot take it to the asset side, profit and loss debit balance, or reserves and surplus debit balance. No. You'll have to show it on the liabilities side only, the equity side only, and with a negative side. The resulting figure is in negative, you'll have to show it on that side only. For each component of reserve and surplus, whether the company has disclosed the following, the auditor has to check: opening balance, changes during the year, total profit and loss, just a second. Okay. So, right. Profit and loss for the year, dividends declared, transfer to retained earnings. Retained earnings is something which is your surplus only, the account. Any other changes, balance at the end of the reporting period. You'll first have to read it, understand the concept, then I'll show you in practical as well. You first have to make yourselves very much clear with the conceptual understanding. Only then I'll be able to show you in the balance sheet itself how is it shown. But first, just understand it, understand the concept clearly. Okay? Okay. So any doubt till reserves and surplus? In reserves and surplus, please come up with it. Any doubt which you wanted to ask or which I could have skipped while looking into your queries? Okay, fine. So whatever we are doing, I'll show you. You will have to go through the notes as well as the study mat, and I'll show you practically in the next session as well what all we have covered and the presentation part as well. But first we'll have to read it, right? I'll not show it just right away. Okay, see, this is it, this is it. First you have to understand. Read from the mat, then I'll show you practically. The next part, borrowings. So an enterprise and a company or a firm, it can even lend money or accept money, right? Not being in the nature of money lending business. Money lending businesses have their main, like operating activities, money lending only. They give money, they take money. But a normal firm, a firm could be Tea and Cookies Private Limited. It is into the business of tea, cookies, and other complementary products. It is not in the business of money lending. Not a barter. Tum mujhe chai do, main tumhe rupaya dunga. Not like this. Okay? It sells tea and takes money. It sells cookies and takes money. But what is borrowing? Pure exchange of money. The element being the time value. I am accepting money or I'm requesting money from an entity or a person as on today with a promise that I'll be returning it someday in future. The consideration being, what is the consideration in time value of money? Come on. Audit is a subject where you get to talk about accounts as well, you get to talk about financial management as well, you get to talk about EIS subject as well, the management subject as well, the taxes, costing, everything, the law. Yes, share capital is not actually borrowing, it is a capital, owner's fund. I asked you, yes, Siddharth. Consideration is interest, right? So what do? You accept money or you ask request for money and you pay it at a later date. It is same both ways. Even if I am helping someone, I am helping someone in times of need and I'm lending them money, I'm giving them money. What would I get in return? Interest. In the first case, interest was my expense of the business. In the second case, interest is an income of the business. So we'll be covering these two aspects of the balance sheet today. The borrowings, first, which will find on the equity side of the balance sheet. The liability side, it is a liability of the company. And the second is loans and advances when we advance money to someone else. That is loans and advances. So I'm taking these two topics simultaneously or one after the other so that you could make a difference out of it. That almost all the procedures are same. One procedure is when we are in the position of a borrower, when we borrow money. And the second is when we are in the position of a lender, when we lend money. And this is not the usual business of our company. This is an ancillary activity. This is a financing activity. Not an operating, but financing activity. Okay? Liabilities are the financial obligations of an enterprise other than owner's funds. Owner's funds is also a liability for the business. I hope you all understand the business entity concept. You all have read about it, the business entity concept. So whatever funds, whatever capital, whether it be the proprietor, the partners or the shareholders, they have invested in the business has to return them. So it is a liability of the business. So liabilities are the financial obligations. So owner's funds being a financial obligation, liabilities are also the financial obligations of an enterprise other than owner's funds. What do liabilities include? Liabilities include borrowings. Borrowings are non-current liabilities. Trade payables and other current liabilities. What are trade payables? The short-term payables you come across in your trading activity, like the creditors, deferred payment credits, and provisions. So this is something which you will be doing in current liabilities. And this is something which is non-current. Borrowings are non-current. So we are taking up the non-current part. Verification of liabilities is as important as that of assets. For if any liability is omitted, you forgot to recognize it in the financial statements, or understated or overstated, the financial statements would not show a true and fair view of the state of affairs of the company. But obvious, you're not showing a liability. The position which is being perceived is healthy. You have understated your liability, again the position is healthy. You have overstated a liability, you are creating a burden on the company's finance, that you have overstated the liability and actual it is not up to that value, of that value. So it is not representing, it is not showing a true and fair view. So that is why we have to check the liabilities as well. Borrowings are monies made available using external sources like bank loans. You take loan from a bank, debentures, public fixed deposits. You might have read about the chapter on deposits in your Companies Act. There are Companies Acceptance of Deposit Rules as well, Rules 2014, and provisions with respect to the acceptance of deposits from the public. Right? You could raise money from your directors or relatives of the shareholder directors, right? In the form of loans. So this is what borrowings are. Okay, right? Let's move ahead. How do you check the audit? Are you able to follow the sequence with every head? I hope there is no confusion with respect to that. We are taking each item which you have read in your previous levels as well, be it graduation, be it foundation, CPT, or year +2. I hope you are following it, that we are taking each and every head. In profit and loss statement of profit and loss, we took up every head, the revenue, the indirect incomes, and the purchases and the expenses. Now we are on the balance sheet. We are done with the share capital part. We are done with the revenue and surplus part, reserves and surplus part. Now I have come to the borrowings part. See written over here. Borrowings, the third part. Borrowings. Keep a picture of a balance sheet in your mind. I'm going to show you a balance sheet in the next class when we're halfway through, so that I'll be able to make a comparison what we have covered and what we are yet to cover. Just imagine a balance sheet in your mind that yes, we are done with the share capital. We are done with the reserves and surplus. Now we are heading towards the borrowings part. Further, what would be left? The current liabilities, because borrowings are non-current liabilities. What would be left off on the equity side or on the liability side of the balance sheet? Only the current liabilities. Then we'll shift to the asset side. The fixed assets, the non-current assets, and finally the current assets. Done. We are sorted. Our chapter is finished. So what are we doing? We are first discussing what this current head actually means and what are its contents. For an auditor to audit anything, he or she should be well versed with the knowledge of that particular head. What is covered in that head, what should not be a part of that head. Only then he'll be able to apply his audit procedures. So what sequence we are following? We are taking up a head. We are discussing about the head and its contents. Then we are shifting to the audit procedures, which an auditor needs to apply as a part of his audit program. So for borrowings, what are the audit procedures? On the basis of assertions, the auditor, on the basis of assertion number 1, firstly will check the existence. All borrowings on the balance sheet date represent valid claims by banks or other third parties. So if the company owes money to a banking company, could be one bank, two banks, three banks, or other third parties, if they have taken loan, if allowed under the Companies Act, or if you are auditing the financials of a proprietor or a partner, they might have taken loans from their family members. In the case of companies, different rules apply. Because in company, the owner and the management is different. Company is the separate legal entity. As someone mentioned in the query session, corporate will. For companies, the situation changes. There are many rules. We'll have section 185, section 186 of the Companies Act, section 180. They govern the rules related to borrowings. So whatever claims you are able to see on the face of the balance sheet, they are actually valid. They are not fake. whether due to banks or other third parties as allowed. So what would you check? You'll check the board meeting minutes for approval of new lending agreements. During review, ensure that new loan agreements or bond issuance were authorized. What are bonds? Debentures. The company issues debentures. Debentures are also kind of borrowings. They're not a part of the capital. I hope you all know. Debentures are borrowings only. Unlike preference shares are a part of the capital, but debentures are not. Bonds, debentures. What would you check? That if issued during the year, or if loan taken during the year, it was approved by the board of directors. The case is not of a problem in the case of a proprietor or a partnership firm. But when it comes to a company, Companies Act governs the same. And Companies Act says in one of the restrictions, a company cannot borrow more than this much amount. You might have read it in your company law. Restrictions on borrowings. Restrictions on borrowings by a company for this borrowing or for any kind of specific borrowing, or if you are exceeding the limit as allowed under the Companies Act, you will have to pass a special resolution in the board's meeting, in the shareholders meeting, whatever be the procedure. So in the case of companies, it is very much important that the auditor studies the minutes of the board meetings. If the minutes of the board meetings are studied well, the auditor can clearly get a picture that in what situations the company has borrowed from external sources. Okay, fine. Okay, so assertion number 2, completeness. The same assertions moving with every head. Same assertions moving with the head of profit and loss. Same assertions moving with the head of balance sheet, just with 2 changes. In the case of occurrence, it is existence in the case of balance sheet. Instead of measurement, it is valuation in the case of balance sheet. Completeness, that all borrowings have been accounted for. They have been accounted for in the books of the company on a timely basis. So what do you need to know as an auditor? The details of loans, what would be the interest rate which you will be paying? You will be paying at what rate of interest? Nature and repayment terms. So are the debentures redeemable or irredeemable? The nature. If they are redeemable, what are the repayment terms? You will be redeeming at par, at premium, or at discount. Can you relate to your accounts part? The repayment terms. What will be the interest rate of the debentures? And you'll check the debenture holders agreement, the debentures agreement. Verify that borrowing limits, these borrowing limits are calculated as per the various provisions of company law. As per the various provisions of the Companies Act, the borrowing limits are calculated for every company. This is company specific. And the auditor has to check that such limit is not exceeded by any agreement entered into by the company. Whether it is debenture or whether it is a third person, the borrowing limits are not exceeded. The auditor has to check. If as per the applying the provisions of the Companies Act, various provisions, you'll get to read about them in your company law or in your CA final as well. I'm not taking that up because it will create a mess for you. I'm just telling you that these borrowing limits are calculated as per various provisions of the Companies Act. For example, the limit we get is 15 crores. And the company is also already having loans outstanding to the balance of 14 crores. And the company needs more money. If the limit is 15 crore, it can only borrow one more additional 1 crore to reach up to the limit. It cannot borrow more than that. If it borrows, that would be a violation of the Companies Act. So auditor gets the working of this limit, the borrowing limit, as per the various provisions of the Companies Act, and compares it with the borrowings of the company. If found that they have borrowed much more than the limit, it will definitely be a part of concern on the auditor's end for his report. Okay. Part B, roll out and obtain independent balance confirmations SA 505 in respect of the borrowings from the lender. What does it say? Part B, very easy, very general. इसका कोई मतलब मेरे को समझाएगा part B का? Anyone who could explain me part B and how you can do it? Here, rights and obligations would be here. See, borrowings is obligation only. Rights is over assets, and obligation is over your liabilities. So, rights and obligations is in balance sheet. But ready, you are right. Irredeemable, not issuable India. It's fine. That was just an example I gave, just to make you guys understand the matter. Okay, roll out and obtain independent balance confirmations, SA 505. What is independent balance confirmations in respect of borrowings from the lender? Good, yes, Karthik. I'm not getting a clear answer. Give me a clear answer. You all are just roaming around the answer, playing. Give me the exact example. What could be that external confirmation? This is what happens. This is what happens when you write. See, you're talking about external confirmations. You're talking about balance confirmations. Everybody, that is written over there. Roll out and obtain independent balance confirmations in respect of all the borrowings from the lender. Right? Give me an example for the same. Yes, Nilabju, very good. Yes, Neha, good. What is the document of external confirmation you'll be writing in your example? The banker's certificate. If you want to confirm my company's balance sheet, which I am auditing, it states that the company has a term loan against the purchase of machinery to the amount of 1 crore 15 lakhs. It is there in the books. What is the external confirmation document? You have asked for external confirmation. What is the document? Example, the banker's certificate. The banker will give a certificate. Yes, sir. As per the external confirmation demanded by you, the company owes this much amount to us against a machinery term loan. The banker has given balances from its books of account. And now you are going to tally it with the company's books of accounts. Right? As someone said, positive or negative confirmations. The banker's certificate is an example. So everybody is writing external confirmations, balance confirmations. That is done. How will you do it? This is what you have to write as an example in the answer. In case of non-banking persons or institutions, you'll ask them for a positive or negative confirmation, as someone said very rightly, Nilabjo. I'll ask company XYZ Limited. Tea and Cookies Private Limited states that it owes you 20 lakhs rupees as a borrowing. Give us a positive or a negative confirmation. If they give a positive confirmation, it matches that yes, in their books also, Tea and Cookies balance tracks at 20 lakhs rupees. But if they give a negative confirmation, negative external confirmation, you'll have to increase your substantive procedures and inquiries. So while writing answer, if the question asks me, how will you assert about the completeness audit procedures? Obviously, or in general audit procedures, right? With respect to borrowings or general audit procedures, I will ask for independent balance confirmations as per SS 505. For example, a banker's certificate, a copy of account from the lender. Yes, Pooja, bank statement is also like you can check it. Yes, debtor certificate with debtors, debenture certificate with debenture holder, good. Yes, Cyril. Obviously, if you write examples, this gives some strength to your answer. But just make a note that if you feel like that, if by giving an example, you could add weightage to your answer only then. Otherwise, just don't run after the examples and you are writing. Potentially, you are writing only the examples in the exam and not the subject matter. Okay. Agree details of leases and hire purchase creditors recorded to underlying contracts agreements. You have done hire purchase and leasing agreements with respect to if you have taken a machinery on hire purchase, if you have taken a land on lease, what are the lending agreement, what are the agreement, and you have to match that. Whatever balance is standing in your books of account, you have to tell it with what the agreement says. In how many installments would be pending from now. You'll make a repayment schedule, or if a repayment schedule is there in the hire purchase agreement, you will tell it whether it is matching with that or not, or the company Tea and Cookies Private Limited has missed some of the installments. You'll get to know about it from the hire purchase or the leasing agreement. In case of debentures, examine trust deed for terms and dates of redemption, borrowing restrictions, and compliance. Read about read the chapter of charges in your company law. Is there a problem, Ashok ji? I think the video is fine. Okay, fine, sir. Fine, fine, fine. Break लगा दीजिए अब 10, 15. Okay, I hope everyone is back. We were talking about charges. Have you people read about registration of charges in your law subject? The last time what happened was we took a break at 8 p.m. So I suppose even the internet, the net of nets feels I need a break. Huh? ये आज भी 8 बजे तक ना लगातार बैठे थे. It says when the debt is retired, ensure that a discharge is received on assets securing the debt. चलिए अब थोड़ा law की तरफ चलते हैं. Let's move to law. What happens is, I'll take the example of bank. Okay. So when I take loan from bank, if I'm a proprietor or I'm a partnership firm, it is completely fine. I just enter into an agreement with them, and all the loan formalities like credit appraisal, then they where they see my credit worth, and then they sanctioning of the loan, disbursement of the loan, then post disbursement review. Everything is done by the banker's end. So what do? They take a collateral. I hope you all know about collateral security. If what we know that if I'm taking a mortgage loan, so I have to keep something on against that loan as a mortgage. For example, in the case of property loan, right? Housing loan, the house under construction, or if it is like what you can say, uh, loan for vehicle, like the car loan. So the car is hypothecated. That is a security. Gold jewelry loan. You give the jewelry, the gold to the bank. That is pledging. You all understand the difference between mortgage, hypothecation, and pledge. I hope you all understand. Hypothecation is of movable assets, pledge is of movable assets, and mortgage is of immovable assets. I hope you understand the difference between these three terms. But in the case of companies, the matter is a bit technical and legal as well. In the case of companies, when you offer some asset as a security against a loan, you have to tell this to the government as well. Remember the form Asset 7, the PS3? You file it at the MCA website with the registrar of companies. In the same way, there are forms related to charges known by the name of CHG forms. CHG1, CHG3, 5. You might have read about it. These forms in the chapter of registration of charges in law. That form contains the details of the property being mortgaged against that bank loan. It contains each and every date, and you'll be surprised to know that in that form you have to give the geographical locations of the property as well, the latitude, the longitude. It contains an option over there that you have to give the geographical locations, like you send the locations on WhatsApp and all, Google Maps. The same way you have to give the locations of the property as well, which is being offered as a security, which is being mortgaged. In that case, what happens? We have to tell the ministry, the ROC, that this asset belongs to the company, but we have offered it as a security, as a collateral to the bank. Now the bank has a charge on this asset. The bank has a charge on this asset. The legal word is charge in case of the company. In normal routine, whether it is a proprietorship or partnership, for example, I take a car loan. The bank has hypothecated my car. In my registration certificate, the RC, it would be written hypothecated with XYZ bank. In the same way, in the case of companies, a charge is filed with the ROC with the name of the banker, the loan, the amount, the company's details, the repayment terms, and the agreement which is signed in between the borrower company and the banker or the lender. It is attached as an attachment. It is annexed as an attachment with that form. It is signed and then filed with ROC. This is known as first charge. Now suppose my property's value is 1 crore and I have taken a loan of 30 lakhs. To take additional loan of 20 lakhs, I can render the same, offer the same property to the same bank or a different bank. Okay. So now in that case, there will be again I'll be filing the same form. Now that banker will have a second charge because the first charge has been already created over that asset. If the company is not able to fulfill the promise to pay back the money, commits a default, that property which has been mortgaged, that will be sold off and the proceeds will be divided as per the ranking of the charges. Differs from case to case, charge 1, charge 2. So you file those forms with the ROC to tell them that yes, legally they have a charge on our asset because we have borrowed money in the case of companies. Now when I took car loan, it was for 5 years. I paid it 7 years. I paid it back. Now I have to get that hypothecation removed from my car's registration. I'll do all the paperwork and I'll file it with the normal or my RTO office, regional transport office, that please issue me a new RC. I have paid off the loan. I am debt free now. My card is debt free now. Please issue me an original RC with my name only, and there would be no mention of the hypothecation over that because my car is debt free now. The bank has got no rights over it because I have fulfilled my obligation of paying back the loan. I would ask for an NOC from the bank. I have paid your loan in full. Give me an NOC. I'll attach it with the required documents and submit it to the regional transport office that please clean me of any loans. I am now loan free. In the same way, when a company meets its obligation, it pays off the loan completely, all the repays with interest. Now we have to file a form again under the charges section only that the debt is retired. We have repaid the loan. So to discharge that charge, the opposite word, discharge, right? So we have to discharge is received on the asset securing the debt. Okay, this is how the case of companies go. I hope it is clear. Yes, company has to register a charge with ROC. Notify the register of company to be registered in register of charges. Very good, Nilabju. Register of charges is maintained with the ROC. Hiral, compliance with covenant means whatever terms and conditions are written in that agreement to comply with that. Obtain written representation that all the liabilities which have been recorded represent a valid claim by the lenders. So this is a written representations, SA 580, management representations you have to obtain from the management. I hope the charges part is clear. Obtain a schedule of short-term and long-term borrowings including debts outstanding at the end of the previous year, as well as any new debt or renewal of debt showing beginning and ending balances and borrowings taken and repaid during the year. So what do you all require? You require if any old loans balance is outstanding, if the company has taken a new loan during the year, if any loan has been renewed during the year. Renewal happens in the case of overdraft, CC limits, you'll read about them in your chapter of bank audit. Or like renewals happened in the case of like loans, many types of loans during the COVID period, when the government came up with many schemes. One of them was a GECL. So to cover up the losses for the people who could not do well in business during the COVID period, whose businesses were impacted, the government came out with a restructuring scheme where it offered additional loans to make up for the deficiency, the default in their repayment during the COVID period. So what does the auditor need to do? Auditor has to obtain a schedule of all types of loans which were outstanding during the year end, taken during the year, right? New debts, renewal of debts, and some loans which were taken during the year and repaid during the year itself. Even then, the auditor has to audit those transactions as well, which neither had an opening balance nor had a closing balance, but some transactions took place. For example, the company took a loan from the relative of a director of 5 lakh rupees and repaid him the same during the year itself. In that case also, I'll have to take care of the transactions. What mode was used, why was that loan taken, everything I can ask for. Schedule means the repayment schedule. When did the loan term started? What are the modes of repayment? Monthly, quarterly, half yearly? What is the installment? How is the interest going to be charged? Up to what tenure is the loan? Of what tenure is the loan? That is a schedule or schedule, whatever you want to call it. Consider any evidence of additional debt obtained through examination of minutes of the board of directors, some significant contracts entered into by the company, confirmations from banks, lenders, if evidence of additional debt, the debt which is outstanding in the books. Apart from that, like I told you, in the COVID period, additional debt was taken by companies to cover up for the defaults in the original loans, which was not their fault, but a pandemic which disrupted their business. Trace the closing balances as per the schedules to the journal ledger. So you have obtained a schedule. Now in that schedule, obviously that schedule will say monthly payments on this. From that schedule, you can work out any payment outstanding on any date. I will go to 31st March. What should have been that loan's outstanding balance as per the schedule on 31st of March? This should have been the balance, 10 lakhs. But in the company's books or the financial statements, the loan stands at 12 lakhs. Why is the loan standing at 12 lakhs? Because the schedule takes care of the interest as well. So why is it standing at 12 lakhs? It is standing at 12 lakhs. The company would have missed some of the installments. There could have been a default on the part of the company. Or what could be the reason? Technical reason on the bank's part. Technical fault on the bank's part. The loan balance could be 8 lakhs. The company is very fast in paying its loans. It is doing really good. It is moving ahead of time. The balance should have been 10 lakhs and the balance is now 8 lakhs. But we have to gather evidence for that. The payments have actually been made. You have to be very much particular that it should have been 10 lakhs. Why is it 8 lakhs? Has the company been quite active with its repayment of the loans? You will check that. And you will ask the reasons for the difference from the schedule with your books of account. Review subsequent transactions after the end of the reporting period to determine if there are unrecorded liabilities at year end and the transactions are recorded in the correct period. For example, fresh loan taken near the balance sheet date. So after the end of the reporting period, you'll have to determine if there are any unrecorded liabilities at year end and the transactions are recorded in the completeness cutoff. We'll have to see the basic nature of the loan taken or the transaction, whether the loan pertains to the previous year, the reporting period under our consideration, or to the next year. How can it be checked? The transactions at the end of the previous period and subsequent transactions at the start of the new year. You can always work upon those transactions and you can get to know, you will definitely get an idea to which period this loan belongs to. It gives an example, fresh loan taken near the balance sheet date. For what purpose this loan has been taken? Whether the installments, whether the schedule of repayments has started, whether the loan was only sanctioned. See, if you have got the loan sanctioned only, you have obtained the sanction letter, that particular loan will not be shown in the balance sheet of that particular year. Only if you have received the money, you have used the loan money, only then you will show it. If it has been dispersed by the bank to your account, only then you will show it in your balance sheet. Otherwise, only on the basis of sanction, you cannot show it in your balance sheet. This is what here the part is trying to tell you, that review subsequent transactions after the end of the reporting period as well as at the last of the reporting period. Valuation. When ready, if the loan which has been taken during the year and it has not been repaid, it is not there in the balance sheet, I completely agree. But you are auditing the books of accounts, you will see, you will go through the ledgers, and you will definitely get to know about the loans which were taken and repaid during the year itself. You will not be asking for the ledgers of only those accounts which are appearing in the balance sheet or the profit and loss. You will go through the ledgers, the books of account, and in those books of account, under the heading or category of borrowings, you will get to know about those accounts as well, which you are asking me. I hope under it's clear. Sanction means, Aditi, the bank has passed the loan. It has passed the loan to be given to you. It has passed, you have agreed, the banker has agreed to it. After all the pre-sanction or after all your appraisal work, the banker is agreeing that the bank will give you the loan in the form of a letter. They accepted that, yes, we accept your request, we will give you the loan. That is a sanction letter. That loan has been sanctioned in your name. The next part is the disbursement, when money is actually credited to your account in the form of loan. Okay, Aditi, that is sanction. You'll get to know about it in your chapter of bank audit. Now, valuation, the liability is recorded at the correct amount. Again, the same procedure, independent balance confirmations, and ascertain that the confirmation asks for all information. Like if you ask for a banker certificate, it will tell you about the type of loan, the rate of interest being charged. If the banker is highly transparent, it will also tell you the interest charged during the year and the outstanding balance at the end of the year. Okay. You read all this and I'll show you in your next session what does a banker certificate look like. What does it tell you? Okay. But you'll have to read first. This from your study material, everything. I'll show you in practical how does a banker certificate look like. How does a charge form look like? Okay. Okay. So applicable interest rates, due dates of the payment of loan, and I'll also show you the repayment schedule. An example of the repayment schedule. Okay. I'll also show you that. Collateral and security interests. Send reminders for non-replies. For example, if you have not received any reply against your external confirmation, send them reminder. The third parties, please provide us with the relevant certificate or accounts copy. Compare the balances as per the confirmations obtained with the books of accounts. If there are any differences, ask the company management for reconciliations. And check whatever explanation they give you. Right? Determine that the accounting policies and methods of recording debt are appropriate and applied consistently. Consistently means year after year, the same policy. There is no change in accounting policy in recording the debts. For example, 1 year you are showing it in the long term and another year you are showing it in the short term loans. No. You'll have to ascertain the basic nature on the basis of the loan tenure and then classify it accordingly. Agree loan balance and loan payables to the loan agreement. Again, with as per the loan agreement, you'll also have to study the loan agreement. Recompute the interest and discount or premium on redemption. Obviously, if it is a bank loan interest or redemption of debentures, then whether premium has been properly calculated and paid or discount has been properly availed on the redemption. Check computation of the amortization of premium or discount. The premium or discount is amortized. I hope you all know what is amortized, to write off amounts in different installments from your against your profits. So premium or discount on the issue of debentures is amortized. Check whether this is an accounting process. I'm not getting into it. You have to check its computation. Very important point. Very important from MCQ point of view as well. For foreign currency loans, check the closing exchange rate used as on the balance sheet date and verify the computation of the restatement of foreign currency balances outstanding at the year end. AS11. AS11. As on the balance sheet date, what closing exchange rate has been used. It could be different from the rate on the date when you took that loan. Dollars rate was 75 when you took that loan. Dollars rate is 78 as on the closing date. It is just an example. Like 31st March ka rate mat check karne chale jana. It is just an example. So there could be a difference in that, and how has the company accounted for that difference? Yes, Aditi, you can always, you will learn about it in the bank audit. You can always ask for the proper, if it is the case of a company, you can always go through the charge forms. If property has been mortgaged, you can always go through the charge forms. You can always ask the banker as well. You are an auditor. You can ask for any kind of information which is feasible, right? You can ask for any kind of information which is feasible and which can be given. It is your right. Point G and H. Yeah, you will find in the case of borrowings, even if in your study material, you will find much of the points common in many of the assertions because they serve dual purpose or multi-purpose. Like you'll find them in cutoff as well, you'll find them in valuation as well. It is completely fine. No need to worry about it. You'll never be asked questions based upon it. if you are finding it in 2 or 3 assertions. I hope the foreign currency loan part is cleared. Prabhas says, I have seen a banker. A banker's guarantee is somewhat different, Prabhas. Banker's guarantee, okay, yeah, non-funded, it's fine. Banker's guarantee is, yeah, see, it's one and same thing. You can, if you have seen a banker's guarantee, good, good. Read the provisions in loan and debt agreements and perform the following. What do you need to perform? That entity is in compliance with loan, the terms and conditions of the loan agreement. The company is complying with that. If there are any provisions with which the entity is not in compliance, determine whether the debt should be classified as current. If enforcement of the provisions has been waived by the lender in case of breach of any covenant by the entity, obtain confirmation of the waiver from the lender. What does it say? It says, if the company has not complied with any of the conditions of the loan agreement, in such cases, the other party, the lender, may ask for its money. It may take the activity as breach of agreement, breach of contract, and it may ask for the return of money itself if the terms and conditions are violated, right? For example, the bank. So if the terms and conditions are violated and the bank asks for all the money, please give us back our money, you have violated. For example, the property which I have mortgaged, I'm trying to sell it to a third party. If the bank comes to know about it, it says you have violated the terms of agreement. You're not complying. In that case, the bank may ask for the whole money itself at that period of time. So as an auditor, I need to see the situation and I have to see what is going on and whether I need to classify that particular borrowing as current, because in that case now it has become current. The company will be liable to pay it any time on the demand of the bank. Further, if the bank forgives us or it waives any of the non-compliance, for example, if I skip one installment payment, the bank says, okay, it's fine, we'll charge you a bit of penal interest, you just pay that, and the next month you deposit both the installments together, the previous month as well as the next month. It could be related to any of the terms and conditions. If the lender waives that, you have breached one condition, yeah, breach of any covenant, it says, in case of breach of any covenant. So if the banker or the lender, in our case, the lender has waived this breach, okay, it's fine with me. We'll modify our agreement, or it is completely fine with us as far as you are committing to paying us the money. We have to obtain confirmation of this waiver from the lender. For example, it could be like, I'll give you a complete banking scenario case. I took a loan from the bankers and somehow things did not work out well. They were charging me other expenses, high interest rate. I want to shift my loan from one bank to another. That is called a BT. In banking world, it is called a BT, bank transfer. What is that? It is not an transfer of the employees. BT, bank transfer, is called when you shift your loan from one bank to another. Right? You break all your ties with your previous bank and join the, you accept ties with the new bank. So the old bank, the previous bank, it charges you some fees that you are shifting from us, you have not compliant with our agreement. In the agreement, it is written that we'll charge you penal interest if you shift from us, and etc. etc. Okay. We get into negotiations and discussions with the bank. No, will not pay you the penal charges for shifting our loan from one bank to other, and etc. etc. You get into meetings and talk about this. Meanwhile, I am carrying out the audit, and I feel the bank has sent you to pay a penal interest of 50,000 rupees, which is under discussion with the bank. So, if the balance of 50,000 bank has already charged you, and as per the bank statement, it is there outstanding in your books of accounts, the balance of 50,000 rupees, which you want to negotiate with the bank that will pay only 10,000, 20,000, will not pay the 50,000. The percentage agreed was this, and you are asking for this much of amount. No. This is a real example which actually happens in the market. As an auditor, if the bank waives off the 50,000 rupees or the 40,000 rupees and accepts that, yes, okay, pay us only 10,000, I'll have to receive a confirmation from the lender that it has waived off the balance as was standing in the books of accounts. So this could be the example. Examine the due dates on loans for proper classification between long-term and short-term. So what is a long-term borrowing? What is a short-term? You have to classify it accordingly as per the accounting standard rules. Where installments of long-term loans falling due within the next 12 months have been disclosed in the financial statements, verify the correctness of the amounts of such installments. What happens is that we have a long-term loan of 7 years, 10 years. And what do we need to check? That the installments which are due within the next 12 months. So we classify it, companies classify it as current, that out of this much loan of 10 lakh rupees, which has to be repaid in 7 years, 20,000 is, or sorry, I mean 2 lakh rupees is going, will have to pay it in the next 12 months. So the concept of 12 months, current and non-current, so that 2 lakhs portion, they show it in the parenthesis or by way of footnote that it is due in the next 12 months. This part is actually current, which is due in the next 12 months. We have to check the correctness of such disclosures by comparing it with the schedule, loan repayment schedule. Examine the debt agreement for any restrictive covenants. What could be the restrictive covenants? The bank could say that if we are sanctioning you a loan, we are giving you a loan. As per our agreement, you will not apply directly to any other bank for a loan. You will first come to us. If we don't give you that loan, only then you can apply it with another bank. So this is a restrictive covenant, right? And if we make default and such restrictions, their disclosure has to be given in the financial statements. In disclosures, we have to state this fact. I gave you just an example of restrictive covenant. Examine the important terms in loan agreements and documents, evidence in charge, inspect of loans and agreements, creation of charge, any documents further you need to check, anything. Miscellaneous, you'll have to check from the agreement. Yes, Nilabju, very much relevant. You took a loan for your business, for example, an OD limit, or you took a term loan. It could be a loan for your business, right? And what you are doing is you're traveling abroad using that money. If the banker comes to know about it, the banker has come to an agreement with you that you need this money for your business, to purchase material, to make payments to your vendors, to make payments for your working capital, for your day-to-day expenses. What are you doing? You're using it for personal purposes. If it is proved somehow by the bank, or the banker comes to know about it with evidence, obviously they can definitely ask you that it is a non-compliance with our agreement. You have taken a building loan. But in term loans, I'll not go to the banking audit chapter. You have that in your bank audit. Okay, I'll not go to that. This is just an example, Nilabjo. I hope it is clear. For personal expenses, bankers usually have a product by the name of personal loans. What could be the other procedures? In case the value of security falls below the amount of the loan outstanding, examine whether the loan is classified as secured only to the extent of the market value of the security. For example, there is a downfall in the real estate, right? There is a downfall in the real estate, or if I have rendered a property as collateral, as security to the bank for a loan, right? For example, I've taken a machinery loan. Let's change our example. I've taken a machinery loan. And within 2 years, with advancement in technology, a new improved version of that machinery comes in the market. Okay. Before introduction of that updated model of machinery, the machinery which was standing in the company's books of accounts, the bank had given a loan of 10 lakh rupees against that machinery, and its market value was somewhere around 8 lakhs. But when an improved model of machinery was launched in the market, suddenly its market value of that old machinery with old technology fell to 5 lakhs. Against a loan of 10 lakhs, the banker had a security of 8 lakhs somehow. Security is usually higher, but I'm just taking a fictitious example. And the value fell by 3 lakhs. Right? As on a particular date, when some of the installments of the loan have been already paid, to a loan of 10 lakhs, suppose the current balance was somewhere around 6 lakhs. Okay. Somewhere the balance was around 6 lakhs, outstanding balance of the loan. And the value of the machinery hypothecated against this was 8 lakhs. The value fell below 5 lakhs. Suppose it fell to 5 lakhs. Against a loan of 6 lakhs, we have a security which is going to yield us 5 lakh rupees. Are 1 lakh rupees in danger? Somehow, if the company fails to repay the money or makes a default, we can realize only 5 lakh rupees by selling that machinery. 1 lakh is still in danger. That is what an auditor has to check. In case the value of the security falls below the amount of the loan outstanding, in our case, it falls below the amount of loan outstanding is 6 lakhs, but the value falls below to 5 lakhs. Examine whether the loan is classified as secured only to the extent of market value of the security. Now, my 6 lakh loans in my financial statements, 5 lakhs would be shown as secured amount and 1 lakh as unsecured. Because against that 5 lakhs, I have that machine which I can sell in the market and realize 5 lakhs on behalf of the company. And 1 lakh is on the discretion of the company whether it is able to pay me back or not. That 1 lakh rupees. So I have to classify it in my balance sheet accordingly. Right? Examine the hire purchase agreement for the purchase of assets by the entity and ensure the correctness of the amount shown as outstanding. Hire purchase agreement, same. The auditor should carefully review the borrowings from related parties and ensure compliance. The most important part. AS 18, Ind AS 24, and you also have a standard on related party transactions, auditing standard. I have to carefully review the borrowings from related parties. What could happen is, I could give you an example. I can take a loan from the open market from a third person or from a banker. I need 10 lakh rupees. I can take the loan from a banker at the rate of 10% per annum. Fine. What do? I ask my brother or a sister concern, give me 10 lakh rupees. I'll give you 12% rate of interest. What I'm doing is I am borrowing at a higher cost. The cost is the interest, which I'm going to charge as an expense in my profit and loss account. This will reduce my profit. Further, I'll have to pay less taxes. The concern of the government over here is, if loan is available to you at a cheaper rate in the market at 10% per annum, what was the need of borrowing it from your sister concern or from a known person, a related party at 12%? Why are you giving them 12%? Why are you claiming higher expenses when something is available to you at a cheaper rate in the market? You go for shopping in the market, you want to purchase a particular, for example, a book, a novel. Two shops side by side. One is selling it at 100 rupees, other at 80 rupees. Obviously, you will buy at 80 rupees. Why would you spend 100? The same case goes with the borrowings. If it is available to you in the market at 10% rate of interest, why are you buying the loan or taken the borrowing at higher cost? So we have to carefully review the borrowing from related parties and ensure compliance with AS 18 or Ind AS 24, like we did the arm's length transaction, if you remember, in profit and loss. Verify whether liabilities towards bank in respect of bills discounted, bills negotiated, checks discounted are correctly reflected and disclosed in the financial statements. The auditor should also verify the amount borrowed is within the borrowing powers of the company as laid down by the AOA and MOA. The auditor should verify it is not contravened with the restrictions laid down by section 180. Borrowings, section 185. Borrowings from directors, section 186. Intercorporate borrowings, restrictions on borrowings. These three sections are the most important sections with respect to borrowings by a company. And I hope you would have read about these sections in your company law. Section 180, section 185, and section 186. The auditor has to check whether the company has complied with the provisions of these three sections. Very important. Caro, you will study about it in your company's audit chapter, the next chapter after this chapter, company's audit report order 2020. You'll find a mention of these sections over there in Caro. Examine the purpose for which the amount is borrowed and it is not used against the interest of the company. Whether entity has accepted deposits. Examine whether the directives issued by the RBI or other appropriate authority have been complied with. You'll have read about deposits in your company's law. The provisions with respect to deposits are being complied with. Here it is always better because on some companies, on some level of entities, Ind AS is applicable, while for some AS is applicable. So it is better if you write. There is no harm. Don't write the wrong ones. If you don't remember, just avoid writing it. Always remember whether it is a law like subject or whether it is law subject or audit. If you remember the section number properly, subsection, clause, AS, SA, only then write it. If you don't remember, don't write. It is always preferable not writing it rather than writing it wrong. Okay? If you are writing it wrong, it will definitely get your marks deducted. But if you are not writing it, there is a probability that your marks will be cut or not. You'll get average marks or good marks. Okay? I hope, Hiral, I'm clear. Presentation and disclosure are simple: presented, classified, and disclosed in the financial statement as per the applicable financial reporting framework. What is the applicable financial reporting framework to the companies? As given by the Companies Act and the accounting standards, whether AS or Ind AS. The same line which we have been reading since the start of this chapter. Ensure whether disclosures have been given, required Schedule 3, Part 1 to the Companies Act. How do you need to classify it? Long-term borrowings into bonds, debentures, term loans. Term loans mean loans for a definite term. 5 years, 7 years, 10 years, like your housing loans are usually for 30 years. From banks, from other parties, sub-classification. Deferred payment expenses, you might have read about it. What are deferred payment expenses? Deposits, loans and advances from related parties. Separate classification for this. Long-term maturities of finance lease obligations. You have entered into a financial lease contract and it runs into years. Other loans and advances, miscellaneous. You just have to specify the nature. Okay. Borrowings shall further be classified as secured and unsecured. Nature of security. What is secured? If any asset can be realized against it by the lender. Unsecured is there is no collateral available. There is no charge available. Where loans have been guaranteed by the directors or others, the aggregate amount of such loans under each head shall be disclosed. Bonds and debentures along with rate of interest and particulars of redemption and conversion. Where they are redeemable by installments, the date of maturity for this purpose. Particulars of bonds, debentures which have been redeemed, which the company has power to reissue, terms of repayment of loans, period of amount of default as on the balance sheet date. If the company is continuing a default with respect to a particular loan or debentures or payment of interest on debentures, it shall be specified separately in each case as on 31st March at the period end. What is the period of continuing default? 2 months, 3 months. It has been 6 months. It has been 3 years. The company has not paid any interest to the debenture holders. You have to disclose this fact. Other long-term liabilities, trade payables, they usually fall under current liabilities, short-term liabilities, right? But if there could be some liabilities like this where they find a place in the long term, you can put them over here. Otherwise, it is a residual. Short-term borrowings. Short-term borrowings could be from banks, right? The same part. Loans and advances from related parties, deposits, others, classified into secured and unsecured, guaranteed by directors, containing default as on the balance sheet date, and current maturities of long-term borrowings, as I gave you the example of 12 months. The loan is of 10 years, but for the next 1 year, this much amount is due. If we put it under the short-term part, you have to disclose it separately, that this is actually not a short-term borrowing, but current maturities of a part of long-term borrowings. Out of 10 years, the amount due in next 1 year is being disclosed over here separately. Nothing happens, Hitesh. You always resort to sampling and other things, so it is completely fine. It is completely fine. Some details may get omitted. It's completely fine. Major details should not get omitted. Some of the details, it's fine. As an auditor, you don't have to care about this omission. It is a management who has to take care of that. That nothing gets omitted, right? Where the company has borrowings from banks or financial institutions on the basis of security of current assets, it shall disclose the following. Now we have come to notes. The company has borrowings from banks or financial institutions on the basis of security of current assets. What could be those current assets? The company's inventory, stock, the company's book debts. The book debts like CC limits, overdraft limit. CC is cash credit. OD is overdraft. So these are given by the bank against stock and book debts as security. In case you make a default, the company will, the bank will, or the lender will sell your stock and realize the money, or the banker or the lender will have a first charge priority over your debtors. This is what current assets. So what do you need to do? The banks or the lenders usually ask for stock statements at quarterly intervals. So the company has to file at quarterly intervals the amount of stock they are having as on a date to these banks, that whatever is there in the books of accounts as on a current date, the value of stock, we have this stock in our godown or in our shop physically as well. The banks get the stock insurance done on your part and charge it, the insurance expenses, charge it to your loan account. The bank gets the insurance done because the bank has a hold over the stock. They let you trade in the stock. But in case you make a default, bank will take over the receipts from the sale of the stock. So insurance is required. Loss of stock insurance policy. Banker will get the insurance done and charge it to the borrower's loan account. Because if something happens to the stock is lost and there is no insurance policy, who would the banker approach? The company is already in a loss. It has lost its stock due to fire. What is the security available with the bank? That is why the banker will always insist on getting the stock insurance done. So it will always ask for the quarterly returns to be submitted to the bank, and it will ask for it to be agreed with the books of account. From this year onwards, this is an amendment in the Companies Act, in the new CARO, which you are going to read in the next chapter, that an auditor has to check and he has to report in his audit report, as well as the management has to disclose the statement submitted to the bank for a particular class of companies above a threshold limit. At what time, what amount of stock statement was submitted to the bank? This is a requirement from this year onwards. If not, whether they tally with the statement submitted or not, if not, summary of reconciliations and reason for material discrepancies, if any, to be adequately disclosed. Right? If there are any differences. Who is a willful defaulter? Willful defaulter means a person or an issuer who or which is categorized as willful defaulter by any bank or financial institution or consortium. Consortium is kind of a loan where 2 or 3 banks get together and give loan to a company or an applicant. Like in the case of, you would say, like in the case of many of these bad loans which have NPAs which have come across in our country. So it is not only one bank in the case of those companies. It is many banks which formed a group and gave loan to that particular company or person. In consortium, there is always a lead bank and participating bank. A lead bank is the leader of that group, which gives a major share of the loan. And other banks are the participating banks, which share a minor portion of the loan to be given to the applicant. So if there is a willful defaulter means the person who has defaulted on his will, left the country, could be an example, or untraceable. That particular company's management or the person responsible is untraceable. So RBI comes out with a list of willful defaulters. If a company has been declared a willful defaulter by any bank or financial institution or other lender can, how can the other lender declare? By giving an article in the newspaper, the news in a newspaper. Following details shall be given: date of declaration as willful defaulter and details of default. What default has been made by the company, which is making it a willful defaulter. This is something which is from this year onwards, which has to be declared in the notes, disclosed in the notes, and the auditor has to check this. Registration of charges or satisfaction of charge with the registrar of company. Satisfaction means completion of the loan. Where any charges or satisfaction are yet to be registered beyond the statutory period, details and reasons thereof shall be disclosed. If you take a loan from a bank or from a lender, a charge form has to be filed within 30 days, 15 days as per the period applicable to you. And if you have fully repaid a loan, the satisfaction of that charge is also to be filed with the ROC. If the forms have not yet been filed with the ROC beyond the time as per given under the Companies Act, these details and reasons for the same should be disclosed, and the auditor has to check that. Right? Nilabjo could be. Willful default is somewhat not that a broad term. Fraud is actually a very broad term. Fraud encompasses many other acts. Willful default could be one of those acts. Okay? Willful default is one of the examples that could be fraud. Okay, willful default could be like due to other reasons. Fraud is somewhat which is like something cunning act, intentional act. Willful default could also be one of the reasons, like the company running into losses, the company not doing well in the market. The willful default reason could be those as well, genuine reasons as well. But fraud doesn't have any genuine reasons. Fraud is a fraud, it is intentional. Okay. Now comes the last part, which we left in the share capital part. Utilization of borrowed funds and share premium. I hope you remember in the starting of the session, I skipped this part. Then we'll do it after the borrowings part. Part A. When, for what purpose are you utilizing the funds you have borrowed and share premium? Let us understand. Where a company has advanced or loaned or invested funds, either borrowed funds or share premium or any other sources or kind of funds, to any other person or entity, including foreign entities, with the understanding, whether recorded in writing or otherwise verbally, that the intermediary shall directly or indirectly lend or invest in other persons or entities identified in any manner whatsoever by or on behalf of the company, ultimate beneficiaries, or provide any guarantee, security or the like, or on behalf of the ultimate beneficiary. I have borrowed money from a lender. where company has loaned or invested funds. This is the second part. The first part is funds. Which kind of funds? Borrowed funds, or its share premium, or any other sources or kind of funds. The company has advanced or loaned or invested. This is the second part. The first part is the bracket part. The company has borrowed funds with it or the share premium fund with it. The second part is company has given this amount fund further to whom any person or entity, including foreign entities, known as intermediaries. Known as intermediaries, whether in written agreement or verbal agreement, on the condition that this intermediary shall invest this fund given by the company out of borrowed funds. The company has borrowed funds. The company is giving this funds further to an intermediary. The intermediary is further giving this money or investing this money in the business of another entity or person known as the ultimate beneficiary, or on behalf of the company, or provide any guarantee or security, or on behalf of the ultimate beneficiary. So, 3 persons involved, 4 persons. The first person is the one which has given loan to the company. The second person is the company itself. The third person is the intermediary to whom the company has further given this borrowed fund. Fourth is the ultimate beneficiary to whom the intermediary gives this fund or invests in the business of that fund, that company. So the chain is moving from the lender and the first occasion to the ultimate beneficiary. In this case, the company has to disclose the following: date and amount of fund advanced or loaned, date and amount of fund further advanced to the ultimate beneficiary, date and amount of guarantee or security, declaration that relevant provisions of FEMA, Companies Act and RBI or Prevention of Money Laundering Act have been complied with. This would be in the case of foreign entities, where you have further given money to the foreign entities. You first read it. I'll definitely give you its example. Okay. You first read it, right? So have you understood the chain? What does the company have to disclose? The date and amount when the company gave this money to the intermediary, the date and amount when the intermediary further gave this amount to the ultimate beneficiary. If there is guarantee or security given, the date and amount of that guarantee. And further, if foreign entity is involved as an intermediary, all the provisions of FEMA, Foreign Exchange Management Act, Companies Act and Prevention of Money Laundering Act, PMLA, have been complied with. So this is what the company has to disclose in this case. Yes, Aditi, you will. Yes, Hiral. Willful default, obviously the company will never ask for it, but the RBI comes with a list. In the case of banking companies, the RBI comes with a list that these are willful defaulters. Before giving a loan to any company or any individual or a firm, the banks always check the RBI's latest willful defaulters list. Now the second part. Now this is something where the company has received money. Where a company has received any fund from any person or entity, including foreign entities, with the understanding that the company, now we are the ultimate beneficiary. We are the intermediary. Where a company has received any fund from any person or entity, including foreign entity, with the understanding, whether recorded or in writing, that the company shall directly or indirectly lend or invest in other person or entities identified in any manner whatsoever by or on behalf of the funding party, or provide any guarantee, security or like on behalf of the ultimate beneficiaries. Now the chain has reversed. Now a company is lending us money. Any person, entity, or foreign entity is giving us money. We are the intermediary now. And they are asking us that please lend or advance this money further to the another company. You have to give this money or invest this money given by us in a third company. So the funding party here becomes the ultimate beneficiary because they are going to derive some benefit out of that investment. Or please use this money to provide any guarantee or security on our behalf with respect to the third company. In that case, again, the company will have to disclose the date and amount of fund received from funding parties, date and amount of fund further given to a third company on behalf of the funding party, date and amount of guarantee security, and relevant provisions of FEMA, Companies Act, and PMLA have been complied with. There are two cases related to borrowings and share premium. In the first case, we are giving money to an intermediary to further invest it for the benefit of ultimate beneficiary. We have borrowed that money from a lender, or we are using that money from share premium account. So what do we have to disclose? In the second case, we have received money from a person or entity or foreign entity that is known as a funding party. And they are asking us, we have get into an arrangement with them, agreement with them, that the money we receive from you, we will invest it for the benefit of the third company, or we will invest it in, lend it, give it to the third company as a loan. Now the funding party, right? The funding party, and in that case also the ultimate beneficiary is the third company. Who is the ultimate beneficiary? The third company for whose interest it is being invested. And the entity giving me the money is the funding party. Now I am the intermediary in the second case. Yes, Aditi, the bank, we may ask for confirmation. Definitely, we can always ask for confirmation from these intermediaries. The last part, where the company has not used the borrowings from banks and financial institutions for specific purpose for which it was taken at the balance sheet date, the company shall disclose the detail of where they have been used. If the amount has been kept idle, it has not at all been used, even that fact you have to disclose. The amount has not been used, we'll use it in the next year. But if it has been used and it is not used for the purpose for which loan was taken, for what other purpose it has been used, the management has to disclose it in the financial statements, and the auditor has to take a note of it, whether it has been properly disclosed or not. Right? This was the borrowings part. I hope quite technical part, enough for the day. I hope this is enough for the day. Or should I take up loan and advances part as well? Same like this. Loan and advances as well. Or is it enough for the day? You can tell me. I'll wind up the session right away if it's enough for the day. If that particular institution is governed by RBI, definitely, Aditi, definitely. Okay, you just read this from the study mat. I'll upload the notes as well by tomorrow. Just read this. Read this from the notes, and in the next class, we'll definitely revise it before starting with loans and advances. Right? With loan, and we'll take up the fixed assets part in your next class. Like we have done the non-current liabilities, like the borrowings, then loans and advances will take up, then fixed assets will take up, will be left with current assets and current liabilities. A whole 1 day full session for that. Current assets and current liabilities, because it is going to be very interesting, and it is you who are going to tell me about the procedures, right? You will be telling me about the audit procedures with respect to current assets and current liabilities. I'll be at ease after we are done with the non-current liabilities and non-current assets. Okay, fine. So we'll definitely take up a revision of what we have done. Quite technical it was in the next class, and further we'll proceed with the fixed assets parts. But do read the borrowings part as well as the loan and advances parts, which I'll be covering in the 10 to 15 minutes in the next session. If you are completely understood, you have almost understood the borrowings part, loans and advances is going to be very easy for you. Okay. Enough for today. Okay. Chaliye, take care and do come with your doubts in the next session. I hope people were asking about activity for the day, but as I told you, we have to first read the concepts. Now we are done with the concepts. We'll try for an activity in the next session. We'll try. Okay. We'll try for an activity in the next session. Fine. Chaliye. Take care, everyone. Good night.